Folks, is it time to go all in? There's one specific stock that you're seeing a lot of people flip on massively, and you're starting to see a lot of Wall Street shout, buy this now, amongst themselves. This is something that a lot of people hated in January of this year, really didn't like it in March and April, didn't even talk about it in May, but are now all of a sudden like, hey, wait a second, we're missing out on this at a rapid clip. I'm going to break down exactly what you need to know about this stock and why a lot of people are sleeping on it and why you probably don't want to be. And before we do that, I am going to give a violent update on some of our recent plays and some different ideas and what's going on with them, because you're going to want to know about these as well before the week starts. I'll put all the timestamps down below and let's get right to work. Okay, let's go ahead and start with our most recent top idea, POAI. So I know we haven't had a new top idea in a couple weeks because we still see this as a primary play, but it has thus far been excellent as a swing trade idea. We originally designated it as a top idea at $3.98 a share on the 26th, and it ran to $6.74. That's a run of about 69.35% alert price to highs. Now, of course, this is the power of showing up every day and doing your due diligence on stocks and actually analyzing setups that make sense. Not just stocks that are in the AI space, but stocks that actually have real potential in the AI space. We made a public video later on the 26th as well and presented the cash and asset versus market cap situation and the overall technical uptrend we saw, and it was a very solid setup. And so far, the market has affirmed that conclusion. Our goal with top ideas and all of our ideas is to present you with interesting setups and again, let you be your own judge, right? And in terms of our top idea specifically, if you look at alert price to peaks, including POAI's current peak, we've done pretty well so far, most of which we've originally alerted during market hours, which means better liquidity for trading. And by the way, top ideas are sent out to ZipTrader U members first before they're presented on the channel, which is a little added perk for people who do join us, although we only have about 2 or 3 top ideas a month. We're trying to do more, but it just depends on how often we can find them. We like to be very selective. Next, Mara Lovely Mara, the dirty T. She broke out to yet another cycle high on Friday. I feel like I say that every video these days, but I'm a big believer in Mara. We've presented on her a lot during the uptrend, and I love the technicals. You have some of the smoothest momentum, and with the XRP lawsuit win, which was a very big deal, finding that they're not a security, well, that's going to cause a lot more interest in the coming weeks and months to flow into cryptocurrencies, specifically into some undebated ones like Bitcoin, and that's going to cause Mara to benefit. However, again, the only thing that I'm really worried about here is the share authorization count increase vote, which is happening on the 27th of this month. They are voting to increase their authorized shares of common stock from 200 million shares to 500 million. That's a massive authorization increase, and in terms of potential fear that can bring Mara down short term, I think that's a big one. That's a big stinking one. So if you are someone trying to long Bitcoin miners during crypto's run, you probably want to look towards Riot as we get closer to that vote. And after the vote, we'll reassess here on the channel. Okay, let's go ahead and talk about another opportunity that we are seeing right now in liquidity squeezes. And liquidity squeezes are small caps with very tight floats and big catalysts. For example, we've been watching PRFX for a while, and when we saw the first evidence of a liquidity squeeze Friday morning, we briefed on PRFX at roughly $8.35 a share, and it ran to $16.81. That's a run of about 101%. But why, Charlito, did that happen? Well, you have this dynamic where the stock rose dramatically on the 11th, and then they announced dilution, and the price dove like a dog. Now, look, I hate dilution with a passion. It always ruins my day whenever one of our plays, even somebody else's plays, gets diluted out. It just sucks. It goes down like a rock. There's really not much worse that could happen to your stock than dilution. It's unavoidable a lot of the time. You can do your best looking at the SEC filings and looking at history and so on and so forth, looking at the cash need, but still not an exact science. However, you need to realize that not all dilution is created equally. How many shares are they offering? What are the instruments they're using? Are they doing it on a public market, a private market? How fast is that going to impact the stock? Is it with warrants? Is it not with warrants? So on and so forth. But for markets, when they see that first press release that says, oh, dilution is coming, they just assume it's all uniformly equally bad, and they overreact to it. I can't tell you how many times a stock will do a really small dilution that has a very little impact to the overall stock, and all of a sudden the stock's down 70%. So a lot of times after a dilution that was actually not that big of a deal relative to the overall company, well, you're going to see a situation where, yeah, the stock has gone down massively, but all of a sudden people read the filings and they're like, oh wait, this isn't even that big of a deal. And then what happens? Well, you get get a massive rebound rally. And that is exactly what happened with this stock, and that's how we were able to find the stock before it ran another 100+%, about 101% to be specific. Now, the lesson here is not to say you should buy and hold stocks as they go through dilution. I'm not saying that. What I am saying is that if a stock has diluted during a massive run that is justified on some big catalyst or some other type of liquidity squeezing event, well, you should actually read the dilution, see how much more dilution they can do, and then judge whether or not it's going to have a residual rally, because a lot of times it does have a residual rally. Not all dilution is created equal. You don't want to hold through dilution if you can help it, but not all dilution is created equal. And if you can understand that while everybody else doesn't understand that, you're going to have a really fun game. Now, if you would like help finding potential setups and catalysts and tracking them each and every market open morning, well, guess what? We do have a subscription to ZipTrader U available and our daily morning briefings. For those of you looking to take advantage of our Flash 50 coupon code on the program, which will get you 50% off the one-time fee, well, I'll put the link to that down below, and we've just extended it another 48 hours. So you have 48 hours to consider joining. You'll get access to our 10+ hours of step-by-step lessons, private chat, which is very helpful, and of course the very popular daily morning briefings. Okay, now it's time for the main entree. I hope you're hungry because we've got a big one for you today. If you look at a lot of big tech stocks, your Microsoft, your Apple, certainly your NVDA, a lot of the biggest tech stocks in the market are at or are above all-time highs. And of the stocks that are not at all-time highs, well, they're moving very aggressively to get to all-time highs. But you're not really seeing that in the same way with Alphabet. Alphabet sure has been moving aggressively relative to last year where everything dumped like dogs, woof, but if you're comparing it to the performance of its nearby competitors in terms of market cap, so on and so forth, it's really underperforming. And it's still a very sizable amount down from all-time highs. But if you look at what's going on beneath the surface and why its competitors have run above all-time highs, well, you start realizing there's a big opportunity here. One that I think is going to lead Alphabet to really outperforming these other players that have already run quite a lot over the next 6 months. And I think outperforming is really an understatement here. So remember, Alphabet is a business that, yes, is still a sizable amount down from all-time highs, but this is a business that produces a ton of free cash flow, some of the most in the world. This is a business that loves to do share buybacks. This is a company that has 93% of the search engine market. Company that not only owns the top search engine, but it also owns the second largest search engine, which is the one you're watching this on right now, YouTube. Alphabet has the biggest advertisement platform. If you're going to advertise something, where do you go? You go to Alphabet. They have a key relationship with businesses, with customers, and with publishers. But wait, Charlie, but the reason that Alphabet is not considered a very exciting stock right now is because they just don't seem to have what it takes to be a winner in AI. And these other stocks, specifically your MSFT, your Microsoft, or your NVDA, are running on the idea that they could benefit from some area of the AI hype euphoria bandwagon. But here's the thing, if you look at rhetoric on Wall Street about Alphabet back in January of this year, all the way up to maybe a month ago, people were saying, hey, Alphabet is not going to be a winner in AI. It's going to be a massive stinking loser who's going to be completely destroyed as a search engine. Why would someone search on Google when they could just use an AI like ChatGPT that can get them a much better result? But a lot of people are starting to wake up to the fact that Alphabet itself is going to be one of the biggest, if not the biggest, AI stock. They're starting to realize that, hey, wait a second, not only does Google, Alphabet have the team to develop and is developing a very aggressive AI platform, but more importantly, they have access to easily get the rest of the world market on there because they're already going to google.com. A lot of the FUD, the fear, uncertainty, and doubt on Alphabet is completely unwarranted, but let's hear some of it. Investors.com reports Google aims to counter Microsoft's MSFT investment in artificial intelligence startup OpenAI by making its own generative AI tools available to software developers. One big question is whether integrating chatbot AI technology into search queries will lower Google profit margins. So a lot of analysts have been downgrading like crazy Alphabet, thinking, oh, AI is going to be horrible for them. Oh no, Google's not going to have these sponsored links anymore. This is really a stupid way of looking at this. Google actually has an opportunity right now to integrate AI in a way that none of its competitors can even compete with. Charlie, wait, are you stupid? Microsoft is trying to do the same thing with Bing. Okay, yeah, but who the hell uses Bing? There are two questions that you have to ask when analyzing an AI setup in an AI company. Number one is, can that company develop a good and useful AI? And number two, can that company get people to use that good and useful AI? You have to have both. but it's much more important to have the second one. If you have just an okay AI, but you can reach a lot of people, well, you're going to end up winning. And let's be real, most people, the masses, have not used ChatGPT yet. You'd be lucky if they knew what it was, but the masses haven't used it yet. But they use Google search every single day. Who is going to have the easiest time implementing an AI search into their business model? I would argue Alphabet. It'd be very, very easy for them to put, oh, I want to search with AI instead of just Google search, just regular Google search. And then all of a sudden, you've got all of these people who are now introduced into AI with the push of a button that they already go to the main page of every single day. And sure, maybe that might cause a little bit of a dip in revenue for Alphabet, but very, very soon, they can just start integrating ads into that in a very, very competitive way. And they can use that to funnel consumers and businesses into more expensive paid AIs that can do a number of different things. Alphabet's one of the only companies that has the ability to actually introduce the masses into the AI space. Right now, people are like, oh, AI, okay, I guess I got to go on ChatGPT, or I got to go on a number of other ChatGPT copycats. With Alphabet, they have the ability to bring it somewhere that everybody's already on. And then once everybody's already on, they could start really integrating with ads too, if the paid programs aren't lucrative enough. But of course, they will be, because you'll get so many people in the funnels. And this is what an Alphabet analyst recently said, quote, in general, Alphabet is attempting to change the way users search and seek out information. Rather than simply being provided with an array of links, users will be provided with a more integrated search results page. At the top of the page, an AI-powered snapshot will give users a lay of the land on the topic they were searching with links. And Alphabet certainly has the resources and talent and data, most importantly the data, to be able to compete amongst the best in terms of AI. So do not sleep on that, right? A lot of people are sleeping on that. They're saying, oh no, Alphabet has no talent, has no resources. Wrong. They have some of the best out there. And while Alphabet is still very, very underappreciated in the AI space compared to its competitors, I think right now you're starting to see a lot of Wall Street wake up in a way they hadn't a few months ago to the potential here. A lot of fuddy-duddy analysts are saying, oh no, you need to short Alphabet aggressively, or at least not buy it because of the competition in AI and how that's going to destroy their search engine. But I haven't seen a single one that pushes real points for why Alphabet can't compete and, quite frankly, can't dominate this race. Here's a good example of a criticism from UBS researcher Lloyd Walmsley. He said, quote, if we look at what's going on in Alphabet, they're integrating generative AI. There are likely to be benefits from that to them longer term. But there are also headwinds, little windy heads. The new SGE experience with generative AI, at least initially, appears to be pushing ads further down the page. So there may be some short-term revenue headwinds. So this SGE experience that they're talking about, if you don't know, it's Google's search generative experience, which is kind of like their beta that they're testing out right now. And this analyst and many others is going out and arguing, okay, well, that experience puts the ads way, way lower on the page than they were when you just go and search something on Google. And that means that Google is likely to see a massive drop in revenue if they start really integrating this and people really start using it versus the native Google search. Now that logic makes perfect sense if you're looking at this at the very, very, very high surface level and you're like a 5-year-old that can't think any deeper. In fact, I think most 5-year-olds could think deeper. You see, the thing is, when Alphabet really decides to roll out AI, it's going to be real easy. It's going to be like a 5-minute phone call to tell a developer to go and put the damn ads at the top of the AI response versus just at the bottom. That's like a 5-minute phone call, and the programmer's going to have to take maybe another 5 minutes to put in the code. It's not like this is rocket science. Oh, we don't know if Alphabet will be able to figure that out. Obviously, they'd be able to figure that out. They've already done that with Google search, and obviously people will deal with it once they've become addicted to the AI search, just like they're addicted to the regular Google search. It's not that difficult to figure out ways to make the ads appear more prominently. Now, this here is the part that's really, really fun. There's also some competitive concerns. We're less concerned about Bing and ChatGPT, though. There's still slight risk there. But you also start to see Snap and ultimately Meta will move into chatbots, which have search-like behaviors. Search-like behaviors, folks. Oof. And potential for search-like advertising. So there will potentially be some fragmentation on the query share and then some disruption on the monetization share. Oof. Alphabet really got to watch out for that Snapchat. Okay, first, folks, any analyst, and I say this in the nicest possible way, any analyst that compares Google search engine to Snapchat really should find another job. maybe pottery. But let's take this seriously. Let's compare the main search engines and the main websites. Two most visited websites in the world are Google and YouTube, of course, both Alphabet companies. That's followed by Facebook and Instagram, both Meta companies. And then you scroll down the list, you got to keep going for quite a long time. Have a burger, have some pizza, have a second or third cup of coffee, and all of a sudden you're all the way down on number 27, and that's Bing. So let's just go ahead and kill Bing right now in terms of its relevancy. But what about Snapchat? Well, it's even less relevant than Bing. Snapchat has about 363 million daily active users worldwide. Google has about 4.3 billion. That's not even close. Google brutally destroys Snapchat. And that's so obvious that anybody with any sort of knowledge they've been on the internet 5 minutes would see that. So that means that the fight here is really between Alphabet and Meta and their various assets. And both are worthy contenders. But let me ask you this question. Of the two companies and of the platforms they have, which platform do you think is going to be more likely to reach an audience looking for search queries and better search that may be very, very easily converted into AI search? Do people go and search on Instagram or Facebook to search for plumbers or plane tickets or hotels or a number of innumerable questions on history or future or different predictions, so on and so forth? Do people go to Instagram or Facebook, or do they go to Google search? Maybe for some specific search queries, they'll go to Instagram to find restaurants or trendy locations, or maybe they'll go to Facebook to find different groups or different restaurants, maybe, but overwhelmingly people go to Google search. So despite what a lot of the analysts are saying, it seems like Alphabet is going to have a much easier time, even if they have a subpar AI, which I don't think they're going to, but they're going to have a much easier time introducing AI to the masses. So this idea that Alphabet is not going to be a massive AI success and should underperform the likes of Microsoft and Meta and even Snapchat is really ridiculous. Anyways, folks, let us know what your thoughts are on Alphabet as an AI play. Are we right on this? Are we wrong? Share your thoughts. Anyways, folks, have a great rest of your day, and we'll see you in the next video.